Subscription Pricing Guide Part 2. Should you add subscription pricing to your menu, and how can you make your addition successful? So in the Subscription Pricing Guide Part 1, we talked about how subscription pricing should simply be one of the three options you provide on your pricing menu, included with hourly retainers and then fixed fee and upfront billing. Firms should not view monthly subscription packages as an all or nothing switch to make with all clients at once. Now in Part 2, we'll discuss how to analyze your practice to determine if you should add this option to your menu. So let's dive in. Should you add a subscription pricing option? Well, that can be answered by honestly analyzing your pricing now. Go through these questions that we're going to give you step by step in order to identify a specific answer for your practice. So the first question you want to ask yourself is, are you currently generating enough profit? We all want as much profit as we can have, obviously, as business owners, and how you identify profit for tax purposes is obviously up to you. But all joking aside, above and beyond just paying your salary, are you also being personally compensated for all the stress and all the liability you carry as the owner of your practice? Are you personally making enough compensation to make you feel good about what you're doing with clients? We work with so many firm owners who want that $1 million practice or that $2 million practice. But we've seen firms that reach that level of revenue often have such huge costs to carrying the practice at that level, they don't ever feel the benefits of having that larger revenue. So only you can answer this question, but try to answer it honestly for yourself. And if the honest answer is yes, you do have enough revenue, then congratulations. If your practice is profit strong right now, then obviously something is working and your current pricing strategy may not need to be addressed. But if the answer is no, then one of the highest impact areas to your profits is your pricing structure. Your pricing is the doorway to your revenue. If you close the door on your revenue because your pricing isn't optimized, then really you can never cut costs far enough to significantly increase your long-term profits, unless you're currently way overspending, and we found that that's very rare for most firms. So that's the first question to ask. The next question to ask is your current ARPC, or average revenue per client, at least at the national average? We've been tracking subscription pricing data for over 10 years. The average revenue per client, or ARPC, for individual non-business owner clients, so clients that just earn a wage on a W-2, if you have them on a value-based subscription model, that's currently about $1,068 a year. For business clients on a value-based subscription model, whether they're Schedule C businesses, S Corps, C Corps, LLCs, it doesn't matter, that average goes up to over $4,788 a year. So what's your current average revenue per client? Simply take your gross revenue and divide it by the number of clients you serve in each client type, individuals and businesses. If you're at or higher than the average, then that's a great thing. That means your price points are healthy. Continue working through the rest of the analysis that you'll find in this guide and make your final determination if subscription packaging might be needed to be added to your model. If your ARPC is lower than the national average, then odds are you're probably leaving revenue on the table. And a common reaction when firm owners compare their fees to the national subscription averages is, well, my clients won't pay higher fees. And that's probably true. Your clients won't pay higher fees for your current offering. And that's why subscription pricing is designed to strategically update the value that your fees are tied to, so the client can see and understand that this is a completely different engagement than just paying for tax return preparation or paying for transactional bookkeeping. No one obviously wants to pay more for the same thing, so updating what value your clients are paying for, that's a proven way to increase your revenue with new and long-time clients without alienating them or causing them to leave. The next question that you want to ask yourself is your current pricing based on the value today's clients want and need? Today's clients see less and less value in traditional compliance services, tax preparation, accounting, and payroll. They still need these services, but data shows they view these services as a commodity. and many Americans are looking for ways to conquer these needs on their own. If you go to irs.gov, it will show in the last 5 years, self-prepared returns ballooned from 50,378,000 to over 71,761,000 taxpayers self-preparing their own return. That's an increase of over 42% just in the last 5 years. When they survey small business owners, it shows that 60% of small business owners believe they won't need a traditional accountant by the year 2026. So the question that I want you to ask is, what value are your current fees being tied to? Are you getting paid for your knowledge and getting paid for the strategic help that you can provide clients, or are you just getting paid for your hours and for your labor? If your pricing is tied to you strategically helping clients, then that's great. You're offering value that cannot be easily replaced by technology. Technology is great at calculating numbers, but it's a long ways off from being able to educate clients about what those numbers mean in the context of their specific circumstances and goals. You can do that as a human being, as an advisor, you can do that. And implementing subscription-based pricing packages can help clarify what value your clients are really paying you for, and it can also eliminate any comparison that you might have with clients comparing you to those do-it-yourself tech solutions, because now you're offering a completely type of value. If your pricing is still basically tied to your hours and labor, then clients will constantly be looking for a solution that can do it faster and cheaper. So regardless of what pricing options you choose to offer as part of your menu, you should educate clients about the differences between paying for labor to complete a return or to process payroll or to reconcile a set of books versus paying you for strategic planning that's actually going to help them achieve their specific goals. The next question you want to ask yourself is, what is your ideal client roster size, or ICRS? The average time spent on client work outside of preparing a tax return increased by over 50% in 2020. The average number of client touches throughout the year has been rapidly increasing since 2018. Clients need more time and more attention right now than ever. And the most profitable firms in today's environment are focusing on spending more time with fewer clients instead of less time with more people. The volume practice, where you were just trying to do as many returns as you could with as many people, that model thrived in the 70s and 80s and 90s and even in the early 2000s. That model is no longer viable to serve today's high-touch client needs. So as part of this post, we want to give you a simple roster size calculator. It's going to help you identify your ideal client roster size, and you can hit the link in the post and access that. It's an Excel worksheet that you can quickly input some data into and get your answer. So if your ideal roster size is smaller than your roster size now, subscription pricing packages can help you increase that average revenue per client so you can scale back without having to take a pay cut. And it can also help you move some of your annual revenue to monthly cash flow, so you can scale back gradually as your cash flow grows, but you can do it with control, and you can do it without needing to make any drastic changes at once. If your ideal is larger than your current roster size right now, then subscription pricing packages can help you increase your roster, but with clients that align with your true value as a professional and the ones that are willing to pay you for the help that they need. So now you have some critical answers about your current pricing. Complete and check out part 3 of the subscription pricing guide to see what causes pricing packages to fail and what makes them successful. And by combining the answers about your current pricing and then understanding the pitfalls with a potential subscription model, that's going to give you a clear understanding if you should add a subscription pricing option in your firm. If you're ready to jumpstart your firm's pricing packages right away, you can register for our free mini course, How to Launch Pricing Packages That Work, and you can access that link directly through this post. Look forward to seeing everybody in the next one.